Hey, what's up, my friends? So welcome back to today's training where I'll share with you a simple trading system that has a 65% winning rate and has generated 1,067% over the last 21 years. So let's get started. So the idea behind this system, goes along the lines of this is number one, strong trending stocks, right, that are in an uptrend, they are likely to continue in the direction of the trend. This has been proven, right, by numerous academic research, even my own backtesting. So yeah, this is kind of like a fact. Number two, along the way, right, these stocks, they don't go up in one straight line. They have, pullbacks, retracement along the way. And what this trading system does is to look to buy the dip, right, to buy the pullback and sell the rally. So it looks something like this, right, just to illustrate. Stocks are in an uptrend, right? They are likely to continue going up higher. So when it makes a pullback, we are looking to buy the pullback. And then when the stock goes up higher, we sell the rally. So now let me give you the exact trading rules of this particular trading system that has a 65% winning rate. So the market that we will be trading is, or rather the stocks in the S&P 500 index, right? The 500 stocks. The trend, how do we define the trend? We are looking to buy stocks above the 200-day moving average. That's the kind of like the filter. Entry point, right? We are looking to buy when a stock price has hit a 10-day low. So when the stock price, right, has reached a 10-day low, meaning, right, the lowest price over the last 10 days. So let me just illustrate. Let's say 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, right? So let's say these are all 10 candles, and on this day, the 10-day, right, this is the lowest price. So when you look left, the left of over here, right? These are 10 candles over here. When you look left, this is the lowest price, right, among these 10 candles here. So this is what we mean by a 10-day low, the lowest price over the last 10 days. So when it hits a 10-day low, what's going to happen is that the next day, when the market open, we are going to place a 2% buy limit order. A 2% buy limit order below the previous day closing price. Okay, and as for our exit, we are going to exit, right, when the market closes, right, above the 5-period moving average. Very simple stuff. So let me give you a chart example, so you can see what this looks like. So you can see over here, this is a chart of Nvidia. Again, number one, the stock is above the 200-day moving average. Number two, over here, the stock made a 10-day low. So if you look at this candle and you look back, right, over the last 10 days, right, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So the 10-day window is from here all the way to here. Okay, and you look back, right, this low, right, is the lowest price over the last 10 days. So the stock price has made a 10-day low. But of course, we don't just enter, right, when the stock price has made a 10-day low. We are going to place a 2% buy limit order below the previous day closing price. So on this candle this day, you can see that the price traded, right, 2% below this candle closing price, right, and we would have gotten filled on this candle. So it's a red bearish candle. Many traders will freak out. They wouldn't dare to enter, and this is where the system shines, right? It buys, right, when the stock is kind of like oversold. So you enter on this candle over here where the price traded 2% below this candle closing price, and you got filled. Where do you exit? Simple. You exit, right, when the stock closes, right, above the 5-day moving average. So you can see over here on this candle, it closes back above the 5-day moving average, and that's your signal to exit the trade. So of course, when the market is closed above the 5-day moving average, the market is closed. You can't, put on a trade. So how do you exit the trade? Well, what you'll do is you will wait for the market to open the next day, and then you exit right at the open on this candle. So you exit at the opening price, right, the next day. So this is kind of like how this trading system works. And of course, you might be thinking, Rayner, this is a cherry-pick chart. Of course, it's a cherry-pick chart to illustrate to you, right, how this trading system works. And you don't have to take my word for it, because we can actually run, right, a backtest, right? Since this is a systematic trading strategy, we can run a backtest and see how it has performed, right, over the last 21 years. And to do this backtest, right, again, we will use the exact rules that I've just shared with you, and share with you another 2 more things. Number one, position sizing 10%. What this means, right, is that, there are 500 stocks in the S&P 500. Let's say you have a $100,000 trading capital. 10% position size means, right, you can trade up to 10 stocks and risk not more than 10% of your capital. So in other words, right, each stock, right, you will risk, right, not more than $10,000. Okay, so let's say there are 10 trading setups. Each setup you allocate $10,000, $10,000, $10,000. So this is what we mean by position sizing 10%. And what happens if we have more than 10 trading setups, right? Then we will exceed, right, our capital allocation. So what we'll do is that we will select stocks, right, that has increased the most in price over the last 100 days. So let's say, for example, we have 11 potential trading setups, but we can only buy 10 stocks. How do we know which are the 10 stocks to buy? Well, we rank these stocks, right, according to their price increase over the last 100 days. So stocks that have increased the most over the last 100 days, we will favor those stocks to buy. Okay, so this is pretty much, some additional insights to give you into the backtesting. And of course, right, we will commissions, we will charge 1 cent per share. So using this in mind, right, here is the results, right, over the last 21 years. You can see that this trading system has, this is the results over the last 21 years, right, on a year-to-year basis. Over here, you can see, right, we have a few losing years in between, but overall, it's a profitable trading system. This is how the equity curve looks like. During the COVID saga, we had a drawdown, but now the system has pretty much, regained from it and now break out to new equity highs. And you can see that we have, over the last 21 years, have about 5,500 trades, about a 65% winning rate. Some of you might be thinking, oh, Rayner, that's not a 65% winning rate. It's 64.25%, man. You're clickbaiting me. You know what's clickbait? Clickbait is I say, right, oh, this is a 64% winning rate. Let's round it up to 70%. Oh, 70%. Let's round it up further to 100%. This is a 100% winning rate trading system. Well, that's clickbaiting, my friend. 64.25 to 65%, it's semi-clickbaiting. Okay, so anyway, it's about 65% winning rate. And you can see that the average gain per trade is about, in this case, 3.17%. Average loss on the system per trade is about 4.33%. So you can see that your risk to reward ratio is slightly less than 1-to-1. But why this trading system, right, still works in the long run is because, right, of its relatively high winning rate, almost 65% winning rate. And yeah, that's pretty much this trading system that I want to share with you. Now, if you have enjoyed this training, right, then you will love, right, this upcoming webinar that I'll be holding. It's called Stock Trading Secrets, where you'll discover how you can consistently beat the stock markets and generate an extra 10%, 20%, or even 40% a year, right, without studying chart patterns or analyzing financial reports. So the next upcoming webinar, it's on 26 September. But you might be watching this video in October, November, December. Then, hey, this event is over. Well, the good news is I plan to hold this webinar, right, on a recurring basis. So I will update the next date, right, when this webinar will be held. So just come down to this page over here, tradingwithrayner.com/STS. Right, and you will see when is the next available date, right, to join this webinar. And I can be sure that, you wouldn't have to wait too long to join the webinar. I will hold this pretty regularly, so others, right, have a chance to, take part in this live training webinar. So during this live webinar, you'll discover how to grow your account to 7 figures and beyond, right, without a large starting capital. You'll learn how to steal, right, hedge funds, winning strategies, so you can avoid wasting time and money, right, on the stuff that don't work. You'll learn, how to generate consistent profits from the market, even during a financial crisis or a recession. You'll learn a simple trading system, right, that you can use to profit from the stock markets, even, right, if you've tried everything else and failed. So once again, this webinar, it is free. Just come down to over here to this page, tradingwithrayner.com/STS. Click on any of the orange button that you see over here, like this over here. You'll be brought to a Zoom webinar page. Just fill in your details and, you can join me at this live free training webinar. So that's pretty much it. So with that said, I wish you good luck, good trading. I will talk to you soon. And oh yeah, the link will be somewhere below this video, so just click on this link and you can, sign up for this free webinar. Ta-da!